Ladies and gentlemen, it's time to move ahead towards the next session, that is data architecture with multi-cloud structure for asset and wealth management, for which I would like to call upon Mr. Balakrishnan Ilango, Solutions Practice Lead, APAC Refinitv, and Mr. Ryan Page, Head of Sales, Asian Pacific South Asia Wealth Refinitv LSEG Business. A warm welcome. Over to you.
Good afternoon, everyone. It's a pleasure to be here. I'm just waiting for the clicker. So I'll be delivering today's presentation. Bala is certainly available at the front table afterwards to answer any further technical questions. So like I say, it is a pleasure to be here. Thank you to Equalifi and Aditya for the opportunity to be here. It's an honour to share the stage with such distinguished guests. I want to pick up before we start on something that was mentioned earlier by Divi in the first panel around the comment she made, with great power comes great responsibility. And I think that's a fantastic comment to make with respect to the wealth tech community. The opportunity is huge, and I think we'll see that today, and we've heard that in the other conversations, but the responsibility is even bigger. What we're playing with here is people's financial freedom and the financial goals that they're trying to achieve. So not only are we creating great customer experiences and bringing data to life in new ways, but we're actually empowering people to better themselves and better the future generations. And that's something really special. It goes way beyond just technology. So today's conversation will be around data architecture in a multi-cloud environment. We will be looking at that from both a client and investor perspective, a wealth management provider perspective, and also a little bit of a sharing on the LSEG journey along that path, and how our products, services, and the way we enable this community has come to life. First, let's have a quick look at the industry trends. We've heard a lot about them today, and I'm happy to say that everything we've heard is reinforced and reiterated in the research that we have done. The wealth management model has evolved over time, there is no question. The horizon we're looking at here is probably 2 decades. Right, so the traditional bricks and mortar, paper-based wealth management model on the far left-hand side, human-led, high net worth, ultra-high net worth and family office client scopes, and some traditional asset classes. There was a slight evolution through to digital support, e-banking, as well as some passive and additional content sets that have happened probably in the last 10 years with the proliferation of e-banking, internet access, mobile devices, etc. What we're talking about today, and where the opportunity really lies, is wealth management 3.0, as it's referred to, which is a modular, scalable wealth management model driven by digitalisation and democratisation of technology and data. And that's not only for service providers, but also for consumers. So if we have a look at just a few observations here, obviously affluent, women, next generation, all pop in as an addressable market. Given everyone has access to technology and the ability to get online, these new segments become important and a large opportunity. Channels and coverage, and I think that's what we've heard a lot about today. That has evolved through to a combination of digitally led, hybrid and human led, with some augmentation of that human led approach. The products and asset classes. Obviously here is where the parabolic curve in terms of data proliferation has really opened up opportunities to bring content, not just in mutual funds, but also other asset classes and other themes. I think Ranjit mentioned in the opening address about climate change and ESG. These opportunities in the market are present and need to be captured. This is quite a busy slide, so I'll go to the area that's most important. The affluent, low, high net worth segment will be producing the largest revenue opportunity for the wealth management sector in the next 5 years, right? The largest, yeah? There's about circa 45 billion worth of revenues in that segment alone, okay? You'll see the total wealth might not grow at the same percentage as potentially the other end of the scale, okay, given that's a more traditional business. But this is the segment where the opportunity lies and needs to be captured. Another really important note here is traditional wealth managers only control a very small portion of this segment here. That means the door's open for people to come and grab it. In terms of the traditional wealth managers who have adopted Wealth 3.0, well, and so are competing for this $45 billion wallet share, research has shown that the ones who are doing it well and are achieving are investing in a high single-digit percentage of their revenue into the transformation. Okay? I'll say that again. They're spending high single-digit percentage of revenue on that transformation to move towards that new scalable and modular wealth management delivery to capture this wallet share. It's significant and is there for the taking. Let's have a quick look at an example of a traditional global player that we work with who is in that category in terms of capturing the opportunity that's there. What you can see here is the target market for their transformation was that mass affluent segment looking for low-cost advice, and it also gave them accessibility to not just their banked clients but those outside. In addition to having private client advisors available, they've invested in omni-channel access across their stack to be able to provide the other more relevant models and approaches to market through a single transformation. Okay? And we mentioned today, it was mentioned in one of the previous conversations around the acceptance of meeting an advisor on Zoom with some digital augmentation is certainly something that clients are now more expecting. And even the more traditional private client type, high net worth, who are used to human interaction, are also looking for a baseline digital interaction to also support their growth. Why are clients doing that is probably, sorry, before I jump on, why are clients doing this, right? There's a reason why. It's one, increased wallet share, right? The money's on the table and they need to adapt to unlock it. What are they doing? They're developing a 360-degree view in terms of a multi-asset and customer engagement model so that they can bring insights to their clients through the right channels at the right time. And how are they doing it? They're partnering with firms that can help them scale with their access to data, their architecture, analytics, to ensure that they can grow this omni-channel layer in a seamless way. As new themes come on board, like climate change, like ESG, being able to easily and seamlessly integrate that into your customer experience quickly is of the utmost importance. So a little bit about LSEG's offering and why we feel we are that right partner. We offer our content and analytics in a modular way. So on the left-hand side, content only, okay? So I think the wealth tech players in most markets, have the skill set and the ability to take content from an API and develop the experience that they need and want. We also go further up the spectrum to provide a layer of visualization or pre-canned widgets on top of that data so that clients can easily go to market with things that are non-differentiated. So things like event calendars or charts. That is bread and butter for a player like us. So spending tech resources and time and effort to get to that point, there's opportunity cost around resources. As well as a full experience. Probably more relevant here to the advisory network, a desktop platform that encapsulates all of our content and provides a user experience which is cross-asset and global in nature. Okay, don't need to read all of this. This is all of our content on one slide. Sorry, did I stop that? Probably overloaded the slide. But what you can see there is, In terms of news, market data, some proprietary ESG and sentiment scoring, as well as some capabilities, right? You can have a look through that, but being global in nature is one important aspect of that. But also, the thing I'd like to thank the wealth tech community for is the way that wealth tech firms go to market has really changed the way that we interact with our customers. Okay? Previously, 5 years, you want this? Previously, potentially 5 years ago, clients would be coming to us looking at a single content set or maybe a couple of content sets in an isolated manner. The wealth tech trend has meant that quite often now we are approached by clients saying, great slide, lots of content, can I have it all? Yeah? Because they're looking to build out that experience across that omni-channel access model, which means they may not know how, when and where they're going to need some of this content, but if they do need it, they don't want to go through a complicated change management process where they need to go and source new data, stitch it into the existing scenario and go to market. So the wealth tech use of this content has really helped us evolve as a firm and understand that the world has changed and access to all of this content in an environment where it can be easily modelled, built with analytics, back-tested and provided to clients is really important and crucial to the success of wealth tech firms capturing the opportunity. So in light of that last point I made around all of the content being available, we have been developing our access points to allow all of the content available through a single API uniform delivery platform. When we were developing this product, the resounding feedback we got from all of our clients was they wanted a mature API stack that supported multiple languages, programming languages, and was scalable in nature. Okay? And we have built that into the core of our data as a service or data platform offering. Okay? In addition to that, clients have also said accessing the content in one location is great. However, if I would like to utilise compute power storage within a cloud environment in a native way, how do I do that? Pulling the content and that wide amount of content like we talked about out of data as a service and onto a platform is somewhat double handling of the content. So therefore, we are also building out cloud native management tools that allow clients to unlock the breadth of content that we have available in a cloud native manner where they can then build their businesses on top of that. I got this right, good. So quickly, before we have a look at some other aspects of how we're going about it, we thought we'd just tie it back to some user journeys. Okay, so first and foremost, from a private investor's journey, advisory and self-directed, they're looking for a provider. Okay, I won't go through each of these, but ultimately through the client acquisition phase, they're testing services, opening accounts, getting started. Right, so if you're a wealth tech provider, you might want to think about what you're actually trying to surface and provide at each stage of that journey, and how quickly that might change. I think in the last panel there was conversations around AI tracking user behaviour and how you can quickly then adapt that to a broader user base. Having all of the content available in a cloud native environment, you can quickly pick up on trends along that and surface them to drive further engagement. Same principle across the client retention stage. Right? Generating ideas, placing trades, managing portfolios and staying engaged, okay, is a common and most important aspect of the journey, and ensuring that wealth tech firms and wealth management providers are thinking about what they need from a data perspective and an analytics perspective to capture the opportunity here is important. The next slide is a slight flip on the same scenario, okay? So this time from a wealth manager or a provider's point of view. So they're looking for prospects, okay, as opposed to someone looking for services. And their client acquisition phase is the reciprocal of the investor journey. So you're wanting to get them interested, okay? If they are interested, you need to get them on board quickly as not to lose interest. And you need to get them started through nudges, through personalised advice, through modelled portfolios that are relevant to their risk portfolios. You need to think about what the client needs to be looking for and what they want to see and how you can engage them quickly. And again, bringing that back to new themes, new content sets, new asset classes that pop up. The ability to be able to easily stitch them into your user experience is something that's important as that sector grows quickly. Same along client retention, getting them committed, trading efficiently, where you can't be tracked versus your peers, and providing differentiated services along that the retention piece is as critical. And really quickly, from an LSEG perspective, we operate in all of the facets of this journey, okay? Which is why that data as a service concept and a platform as a service concept, from our perspective, and being able to offer that to the community is super important. Because no matter what part of this journey you're on or your clients are on, we have products and services that are available to help promote and grow. And some of the names there might not be familiar. A few people outside have asked, are you the old Reuters, Thomson? You can come and talk to us all afterwards. We have a booth. But, Refinitv, Thomson Reuters, London Stock Exchange Group, FTSE Russell indexes, London Clearing House, Turquoise, these are all assets under our banner feeding into that data as a platform and data as a service and platform as a service model that is really powerful and unique within this space. There's another important partnership that I want to share with you that we are really excited about, which is transformational for us as a firm. And that was announced about 6 months ago, and that's a partnership between LSEG, the leading global financial markets, infrastructure and data business, and Microsoft, okay? And this is not just a Microsoft Gold partnership where you pay for it. This is based on co-funding product development. There's over 300 developers working on initiatives to ultimately, like we've discussed, unlock all of that potential around the content that we have available and the way it can be surfaced to clients. It takes a number of different facets. I won't go into each of them individually, but Workspace is our desktop platform, okay, integrated into our experience. Analytics and data platform we've already talked about, okay? It's about offering all of that data, all of that analytics in a cloud-native manner, in a way that you have access to multiple content sets, global in nature, at your fingertips. Digital markets infrastructure is a forward-thinking marketplace for capital market services, probably not as relevant, but all of this is underpinned by a cloud architecture, okay? From a Workspace perspective, from an advisor perspective, the Microsoft product suite, Office 365, Teams, I think over the last couple of years has become more and more critical to workflow. The whole mantra behind the partnership is delivering our breadth and depth of services into that workflow in a ubiquitous manner at their fingertips is going to be a game changer for the advisory model, okay? So they are under pressure from the wealth tech model, but these sorts of innovations from our side are also bringing enhanced analytics to their fingertips as and when they need it. Analytics as a service and modelling as a service is another aspect of the partnership, which is cloud-based and brings together the concepts of analytics as a service, where today's experience around building analytics is it's a fragmented, particularly in a multi-asset class, very fragmented, slow and clunky experience, okay? And I think we've talked about it before, bringing in new asset classes, bringing in new themes, ESG, into an analytics service or into an analytics model today is very expensive, very cumbersome, and doesn't happen quickly. You lose opportunity cost. Analytics as a service, in terms of what we'll be delivering with Microsoft, delivers that as a comprehensive and native integration within Microsoft Cloud as well as the desktop platform, okay? The interoperability between the modelling service that we're also creating is crucial. So traditionally modelling is very infrastructure heavy, so standing up new infrastructures based on new content sets, new asset classes, historical data can be time consuming. There's also execution risk in terms of not getting orders to market fast enough based on modelling being too slow or not having access to the content that you need at your fingertips. The interoperability between analytics as a service and modelling as a service on a cloud base means that clients can quickly develop analytics, feed them into the models, and use the modelling outputs back as analytics. It's all interrelated and a real new way of looking at and developing models and content sets that are fresh and involve new content sets. And just to finalise, and this is where afterwards anyone who's got any detailed questions can engage Bala and myself, but there is a research accelerator which is stood up and used by a number of clients today sitting in Snowflake, okay? And what it does is it allows you to have quick, scalable access to a large number of our content sets, create models, backtest those models, and ultimately bring them to your clients in a way that is quick to market and relevant. So all the conversations we've had around personalisation today and getting content and ideas, nudges into the hands of your clients, there's two parts to that. One is understanding the client behaviour, and we've talked about that, and I think that's where a lot of the wealth tech firms are bringing value to the old model, okay? Tracking what clients are doing, how they're clicking on things, AI behavioural analytics, crucial. But the ability then to understand, based on what clients are doing, what do I need to show them? What model are they going to be most drawn to? Are they sophisticated? Are they not sophisticated? Are they looking through a lot of fundamentals data? Should I be showing them something that is technical in nature? These are the innovations that LSEG are proud to be bringing to the market, partnering with firms like yourself to help that journey and ultimately growing together to capture more wallet share. So please feel free to find us outside. Alok, Bala and myself will be around for the rest of the afternoon. We have a booth out the front. Please come and have a chat and we can discuss how together we can bring content, analytics and user experience together to ultimately drive financial goals. Thank you. Enjoy your lunch.
All right. With this, I would like to call Mr. Bhavesh Sanghvi to felicitate Mr. Ryan Page. Can we hear a huge round of applause? Thank you so much, sir, for all your efforts and your hard work and all the information that you have passed. Thank you.